Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Back to the channel. It's time to recap today's trading session and take a look at what's on the watch list for tomorrow. In today's trading session, the stock market experienced a decline despite some progress being made on the debt ceiling issue. After a mixed performance yesterday, stocks continued their downward trend today. While the Nasdaq managed to outperform, indicating a potential shift in investor sentiment, it's important to note that these gains were driven by a small number of leading companies. This concentration of performance raises concerns about the broader market's health and stability. Commodities displayed weakness today for several reasons, with a significant factor being the lower than expected demand from China for energy. Despite the lifting of COVID-era restrictions, manufacturing activity in China has been disappointing, failing to pick up as anticipated. This slowdown in activity has not only impacted economic growth but has also resulted in lower levels of inflation in China. In fact, there are even concerns of deflation, which adds to the complexity of the economic landscape. Given that China heavily relies on energy imports, particularly oil, the decline in manufacturing activity has directly affected energy demand, leading to a 1.28% drop in oil prices, which are currently trading around $69. Shifting to the bond market, Treasury yields were lower today, with the 10-year yield hovering around 3.6%. However, it's important to note that the yield curve remains inverted, reflecting investor expectations of slowing economic growth. This inversion indicates that investors are pricing in the possibility of a downturn and suggests that concerns about factors such as monetary policy, inflation expectations, and the ongoing discussions around the debt ceiling bill are influencing market sentiment. In the international arena, both Asian and European stocks followed the downward trend observed in the US markets. A notable development was the cooling of French inflation to its lowest level in a year, suggesting a potential easing of euro area inflation from previously elevated levels. Investors are eagerly awaiting German data, which will be released later in the day, as it will provide further insights into the economic dynamics within the Eurozone. Returning to China, analysts had initially anticipated strong economic growth in the country to drive global growth and swiftly alleviate inflationary pressures as manufacturing capacity resumed post-COVID-19 restrictions. However, Chinese manufacturing and economic growth have been disappointing so far, falling short of expectations. A lack of consumer spending has made China an outlier, experiencing unusually low levels of inflation and even bordering on deflation. The Manufacturing Activity Index for May came in at 48.8, indicating a contraction in activity that further fell below expectations. Given that China heavily relies on energy imports, particularly oil, the underperformance in manufacturing has also impacted energy demand, contributing to the decline in oil prices observed today. A noteworthy trend in the market has been the narrow leadership exhibited by the tech sector, with the tech-heavy Nasdaq outperforming the broader market this year. This outperformance has been attributed, at least in part, to the rally in AI artificial intelligence companies. Among the notable winners is Nvidia, whose stock soared after reporting better than expected earnings, pushing its market capitalization past the $1 trillion mark. Nvidia plays a significant role in the AI industry, selling chips used in building and deploying AI algorithms. While the AI sector shows promise, the narrowness of the tech leadership raises concerns among investors. It suggests that market sentiment remains cautious, with ongoing focus on factors such as monetary policy, inflation, and the debt ceiling bill. Looking ahead, market participants will closely monitor the statements from Federal Reserve Governor Philip Jefferson and Philadelphia Federal Reserve President Patrick Harker, who suggested that the central bank could pause rate hikes at the next policy meeting. Jefferson clarified that a decision to hold the policy rate constant should not be interpreted as reaching the peak rate for this cycle but rather as an opportunity to gather more data before making further policy decisions. Harker expressed. On tomorrow's watch list, there are a few notable stocks to keep an eye on. Firstly, Advanced Micro Devices, AMD, is experiencing a small pullback towards the gap area following the hype around NVIDIA, NVDA, and other AI-related stocks. Traders are anticipating a potential drop down to the gap area, and a short idea is being considered below $116. The performance of AMD will be closely monitored to see if it aligns with market expectations and trends. C3. I is another stock to watch as investors observe how it behaves post-earnings. The focus will be on whether the hype surrounding the stock continues or if any potential interest wanes. The post-earnings performance of C3, I will provide insights into the sentiment and outlook for the company. Intel is generating attention following a positive move today based on rumors that Nvidia might collaborate with the company. Traders and investors will be monitoring Intel closely to gauge if it joins the AI hype train and benefits from potential partnerships in the industry. The outcome will be of interest to market participants as they assess the future prospects of Intel. It's important to note that these observations are part of a watch list and should not be construed as recommendations or financial advice to buy or sell stocks. Individual investors should always conduct their own research and analysis before making any investment decisions. Remember to engage with the video by subscribing, liking it, and commenting on your own watch list for tomorrow. Your engagement is highly appreciated as it helps support the creation of informative content. As always, stay tuned for morning briefing tomorrow.